March 23rd, 11:04 a.m. Market's looking
Nice.
good today so far.
Yeah, it is
Nice little
looking good.
rebound here. Dow's up 1100 on the day and S&P up 142 so far.
I'll take it. Take it.
It's a breath of fresh air right there. Rick, how are you?
Doing great. Yeah, doing great. You know where I went this weekend?
Other than
Lucatelli's.
if you're in Doylestown, Lucatelli's is
I
good
haven't had a
cheesesteak.
cheesesteak
It's a
in
good
forever. I guess I
cheesesteak.
didn't technically get a cheesesteak because I got the drunken chicken cheesesteak, but it was
That's
still
the
incredible.
vodka parm cheesesteak, right?
Oh, it was
Oh.
so good, man.
I'm sure you felt super in shape after eating that.
No, I felt horrible.
Light as a feather.
Yeah. So, but it was worth it. Totally
Yeah.
worth it because it was Lucatelli's. And we played pickleball yesterday.
Yeah, you guys showed me pickleball. Pickleball's
Yeah.
fun. I didn't think I would like it. I went into it very close-minded, and
That's how I
but
was.
I liked
That-
it. I
that's
enjoyed it.
how
And
I was.
then we
It's the
spent the
name,
rest.
dude. It's a name, pickleball. That's not a good name.
No, it's not.
I don't know.
It could be called anything else, and pickleball
You-
sounds weird.
Yeah,
Yeah.
I agree. Yeah. All right.
Yeah,
It's
it
fun
is
though.
more simple than I thought it would be. Like it's not like I'm not saying it's easy. I'm just saying like
The rules.
the way people talk about it, sounds like a jigsaw puzzle. But I started playing and I'm like, actually, this is fun. This is easy to, pick up and, you don't
It's a
have
good
to. I
time.
mean, I'm sure, there are people that are amazing at it, but you don't have to be like a star athlete to, be able to play pickleball. So
Yeah, and everybody's real nice when you start because they all, were at that point and they like teaching. So it's good.
yeah,
It's fun.
exactly.
Get outside, do something physical. That isn't just lifting weights or running or something or swimming.
Yeah.
Yeah, cool.
Well, we spent the rest of the weekend moving my brother, your other son, into his new home.
My
And
back,
so
my back agrees. I know I did that.
for me, it's like my arms, like from, I don't know, just lifting the couch and stuff.
Yeah.
It's not my back. It's my, I feel like I got a bicep workout in,
Yeah,
but
he can never move again. That's his house forever.
he's not allowed. Or if he does,
You got to
I'll
hire
help him.
movers.
Well, to go with the real estate theme, I've got a good amount of pieces on the housing market today. I'll kick us
right.
off with this one right here.
Go.
This is straight from Zillow. Average home prices per state and the shift from 2024 to 2025. So what this is showing, for those of you listening, is a map of the United States, and it shows the average home price in 2025 in each state, and then the percentage increase for each state for the home prices, the average home prices in each state from 2024 to 2025. So just using Pennsylvania as an example, the average home price in Pennsylvania in 2025 was $266,000, which is a 4.31% increase from 2024. I just think this is interesting to see the different prices in the different states. Like, for example, look at California with the average home price being $793,000, and that's up over 3% from 2024.
Yeah, $800,000 almost for a California home. That's amazing. I know it's a beautiful state in a lot of ways, but whoa.
Yeah.
Yeah.
And then you have ones that are a good amount lower, like look at Arkansas, $209,000 is the
Yeah.
average home price in 2025. And these are single family homes,
Yeah. Pretty cool.
Look at Hawaii. Look at Hawaii. $967,000 is the average home price
That's
in
amazing.
2025 for Hawaii.
That's
I mean, I got to
crazy.
talk about a limited supply,
And so it's an average. So that 967,000 average is probably very binary, right? It's skewed by 10, 20, 30 million dollar properties on one side, celebrities and so on, and on the other side is very inexpensive homes for, native Hawaiians or locals, because we've been there. It's a great disparity of wealth there. So it's got to be like this barbell setting for that almost $1 million home price. Look, there's three states or regions where prices dropped, huh? What's that?
Florida, I think that's
Yeah.
people, moving down to Florida during COVID and, working remote and then saying, you know what, this isn't what I thought it would be. I'm moving out.
Yeah.
I've heard a lot of that,
Yeah, there's definitely that.
especially with the
Florida went
hurricanes. I heard the hurricanes really drove people that came
Yeah.
from the north, drove them away.
Yeah. Florida really had a huge spike in prices. So to see from 2024 to 2025 a pullback makes total sense. And then Vermont too. I know it's a very small decline, but it's a little surprising. I don't know why, but I don't know. That just seems surprising as well. Interesting.
West Virginia, $163,000, the average home price.
Yeah. I don't know what to say.
And it's interesting because it's kind of sandwiched next to a bunch of other states that are in the, 300s, 400s, and 500s.
Yeah, you're kind of along that northeast corridor. Not exactly, but close enough. And yet the price is
Yeah.
really, really low for the average home there. Look at that. It's
Anyway, I
lower
thought that
than
was fascinating.
Iowa. Yeah, that is cool. I got a piece on real estate while you're on it. Since you started there, I guess I'll
I'll be
stay.
on it for a little
It's
bit.
fine. All right. So this is kind of interesting. This is from Nick Gurley, and he says home sales hit their lowest level since 2009. So the amount of home transactions occurring is incredibly low. 2009, existing home sales were about 3.97 million in Feb 2009, and right now they're about 4 million. During the pandemic, we were as high as 6 million. So there's just not a lot of houses changing hands, and I'm sure a lot of it relates to what you just showed, where prices got so high relative to incomes that buyers have basically mostly gone on a strike. I mean, they're just saying, okay, I'll look. And then when they look, they say, this is crazy. I'm just going to keep renting or living with, at home, parents' home, whatever it might be. It's a real challenge.
Well, I would comment on that, but I actually have a chart that would parlay well off that from Redfin, um, that shows the
Redfin's
amount of
become a
sellers
force.
in the market right now. Yeah, it shows the amount of sellers in the market right now. So this chart from Redfin, there's two actually. The top one shows the over the last a little more than 10 years the number of home buyers in the market in the U.S. real estate market, and currently it fell to a record low. So what it's showing is estimated number of U.S. home buyers and sellers actively in the market: buyers 1.3 million and change, and sellers 1.9 million and change. And then the chart below it shows there are 44% more home sellers than buyers currently.
Yeah.
Talks exactly about what you just said.
Man, that's an
Which
amazing
which is
thing.
amazing because was kind of the opposite, what, 4 or 5 years ago.
Yeah. And you're not seeing prices budge that much considering that there are way more sellers than buyers. And the sellers are
Now,
basically saying, I'm sticking with this price. If you don't want to buy it, then beat it.
I mean, I know home prices have risen astronomically over the last, 7 or 8 years, but all these people assuming, maybe I'm wrong, but all these people assuming there's going to be a real estate crash in some way,
Nah,
I don't think,
it's
I
really
don't
hard for that to
think
happen.
that is a possibility right now, at least. I mean, could prices not increase as much over the next decade in home prices? Absolutely. I wouldn't be shocked if that happens. But, you know, prices dipping really, really hard,
Yeah,
I
getting towards
doubt
like a
it.
bear market in
Yeah.
house prices like you experience in stocks, that's not
Yeah.
likely. I mean, you look back at history, even during the worst times, and it's just not very common. It happens, but it's very rare. I mean, I could see a situation where for the next 10 or 15 years, home prices remain relatively stagnant. And what happens also over those 10, 15 years? Generally, in most scenarios, incomes go up, GDP goes up, all the other metrics on the positive side go up, and maybe home prices just kind of overall hover. That wouldn't be crazy. That would be a way to work off the expensive nature of housing and the overbought nature of housing. Um,
Here's an issue in my opinion, though. Uh, I mean, for the younger generations, for millennials and Gen Z, for the people who graduated college or started their lives right around COVID, 2020, I guess from 2018 to 2022, when home prices really, really, really increased rapidly overnight. I feel like that gave those younger generations a false sense of what the real estate market is. Just thinking, oh, I'll buy a house and it will double in 2 years in price.
yeah,
Just because that's what they witnessed when they first got into the real world. And were starting families, and because that's what they saw. Which I'm not saying buying a home is a bad investment. I'm just saying
Be
It
realistic. Yeah.
when you look back at history over over the decades, that was what we saw in the last decade is an anomaly with
Yeah.
prices getting jacked up that much.
If that's your first experience, like the first pitch that comes in, you knock the cover off the ball and it goes it goes yard. I mean, you feel like, oh, I guess I'm a home run hitter. This is what I'll do every time. You get beer muscles, and that's kind
Right,
of what
but
happened to those buyers.
I'm also talking about buyers that are entering the market right now, saying, well, look at what home prices did, a few years ago. It's definitely going to do that again in the next
Yeah.
few years.
Well, that's human nature. I got a piece coming up on
Yeah,
gold and silver that has that FOMO, human nature.
FOMO, that's what it is.
My
I'll let
most
you get to that.
recent, yeah, my most recent experience is definitely going to be the next experience, and that's not generally not how it works. One more thing on housing. So, you ever go on Google Trends? Do you ever use Google Trends?
Occasionally, I know what it is.
Yeah, I love Google Trends because you can look up anything. What's everybody searching for? What are the things they're looking at on, what are people searching for on
I
Google?
usually use other social media outlets as what's trending.
So check this out. Google searches for can't sell house just hit an all-time high, higher than 2008 and higher than COVID. So this is a Google Trends uh, graph that shows people searching for can't sell house from 2004 till now, and it just goes up and to the right. So it just plays into everything we're selling. Saying people are having a hard time selling their homes, and they're wondering why. Because they kind of, a few years ago, sellers were laughing, saying, "Well, I'll only take cash buyers, and
Yeah,
you
no
better pay over
inspection.
asking."
Yeah, yeah.
So
No, don't come to me with a mortgage. Anything other than cash. Definitely don't expect an inspection. You should probably, if you want the house, you should tour it virtually, not even in person. Imagine
yeah,
showing what you just showed me to a home seller in 2022.
yeah,
You know.
right.
All
Yeah,
right,
they
one
couldn't
more.
go.
Oh, sorry. Go ahead.
No, I'm done. Go ahead. What do you got? More real estate?
One more thing on real estate. I know we're hitting real estate hard today. This is interesting, I thought. This is from Intercontinental Exchange. This chart shows the growth in select average housing costs. So, different lines on this chart, but basically all showing really drastically since 2020, how much average total payment, principal, interest, property taxes, and property insurance have just drastically increased.
Yeah. So wait, is the sharpest increase, is that the property insurance line?
The sharpest increase is property insurance. Yeah.
So property insurance
And then
since
property
2015.
taxes is the second highest increase.
Wow. So homeowners insurance and real estate taxes are up a ton since 2015. I mean, the insurance is up almost 90%. That's
Yeah.
amazing.
I just think this is interesting because you have a lot of young home buyers saying, "Gosh, purchasing a home is really tough today, as opposed to previous, decades, just because it's so expensive." And I was
Yeah.
curious. I'm looking at it saying, what is making it right now so expensive? And yeah, I'm not arguing with them. It is expensive. It's just looking at the breakdown. It is amazing. Insurance and taxes take up a huge,
I gotta
a
tell
huge
you,
part of
my
the increase.
property insurance hasn't gone up like this is showing. I gotta think this is kind of hyper local, like so much of real estate is. Maybe it's more Florida where the hurricanes were, or California where the wildfires were, because I don't know. I'm not experiencing this. Maybe I do have a great homeowners agent, but I don't know.
Well, I
Maybe
guess think
that's it.
about it too. You live in suburban-ish, rural-ish
Yeah.
Pennsylvania, where you're not going to have a hurricane. There could be snow damage or trees falling, I guess, but there's no hurricanes, really no tornadoes. You're not built on the side of a cliff or on a body of water. So maybe this data takes into account that as well.
All right. Enough real estate.
All right, I'm done. I'll stop with real estate.
No, it's good. It's topical. All right. So, what's one of my favorite topics, Keith? That
Self-driving cars.
self-driving cars. You nailed it.
You
Well,
love your self-driving
I'm
cars.
shifting gears. We're going to self-driving aerial taxis.
Was shifting gears a pun intended or no pun
Oh
intended?
no, it wasn't.
That
Good
was
catch.
that was a really corny dad joke.
It's from Semaphore. They say flying taxis may start operating in 26 United States soon as June. So
Can I
three
just
months from
say
now.
I'm good. I don't have to do this.
Yeah, I kind of agree with this one.
This is where I will draw the line for
Yeah.
this stuff.
Well, I got to follow up to this piece, but basically, I can't imagine flying taxis. But the argument is they've gotten much more quiet. You can't hear them. we'll see. So
That's not my concern.
yeah, I know crashing is your concern. I know,
My
and mine
concern is,
too.
there's no pilot in there, and
Yeah,
I'm up in the air on my own, and the thing goes haywire.
it goes, hey, we're going into this mountain. Have a good day.
Yeah,
Well, Archer Aviation
we're
was
going out
mentioned.
to sea.
Archer Aviation was mentioned in that semaphore article, and how they're kind of the I don't know how you'd say this, maybe the Tesla of flying taxis. But here's Archer Aviation stock. Over the last 5 years, it's lost 43% of its value over the last 5 years. I kind of all, people put money where their mouth is. If people put money in harm's way, good or bad, it tends to be a real vote versus just an opinion or an article. And it looks to me like people are voting that this isn't coming probably anytime soon. If this is the company that's kind of the 800-pound gorilla in the space, because the stock's not responding in a way that makes you think it's coming. So
I
that's it.
think that the rules and regs for not only self-driving but flying taxis in general would be so much more difficult than anything on the ground. I mean, I
I
think
would hope.
before we get self-driving uh, flying taxis, I would think that we'd have to have regular flying taxis first.
Right.
It seems like we're skipping a pretty crucial step there.
Yeah. Yep. Yep. I agree. All right, where are we
Um,
going? Take us on the next adventure.
Stock market. So touching on again, just real quick on uh, a lot of stuff going on in the news. Again, we don't get into politics, but with Iran and I've just gotten a lot of questions lately with if and how this could impact the stock market. And I thought this piece was interesting from Creative Planning,
Love creative planning.
showing
Love
S
those
and
guys.
P. Oh, they have great charts showing S&P 500 total returns following the start of U.S. military conflicts. And this is something that when I've gotten questions about, hey, how's the market doing? Is with the news and everything going on, I've used some of these as examples, saying, listen, these events can create a lot of news-driven fear selling. And then what do you see in the years after these conflicts generally come to an end? I mean, just looking at picking one off the chart here, Cuban Missile Crisis. 6 months after the start of the Cuban Missile Crisis, the S&P was up 23%. 1 year later, up 32%. 3 years, 76%. 5 years, 96. 10 years, 158%. You get the idea. Yes, in the short term, there can
Yeah, it
be a
stinks.
lot of
It's brutal.
volatility and the market can be down
Yep.
with news driven fear selling. And, it might impact a part of the economy here and there, but the economy is not the stock market.
All right.
And the point of it is, as long as companies are still making money, as long as they're still, having good earnings, well, eventually their stock prices are going to snap back and reflect the money that they're making.
Yeah. Yeah. Through this big list, I mean, the
Is that a
average
good way to
six.
put it?
Yeah, no, it is. It's the idea that yeah, anybody who goes, oh, the war is not a big deal. It's a big deal. It's not good. It's not good for
No,
stocks,
I'm
but it's
purely
short
talking
term.
about, just the
Yeah.
long term.
Generally, when we've looked at history, it's been a short term, very negative type of thing where nobody should be telling you, oh, it's not a big deal. It's a big deal beyond obviously the human cost and all that kind of stuff. But I mean, in terms of the world in which we operate, it doesn't help with people's portfolios. But that's historically generally just mostly in the short term. And when you stretch it out, like this exhibit's great because it just kind of shows you 6 month, 1 year, 3 year, and you just God willing, a year from now, we'll look back and go, remember that thing we already forgot about that, in terms of what we do here.
So to point that out, a real life example of that, because I've said a lot lately too. The odds of us in 2 3 years from now, maybe even 1 year, looking back on this and saying, "Gosh, that had a long term negative impact on the stock market," is the odds of that happening are very very low. And you have three previous examples already on this chart. I mean, in the last 3 years, we've had, you can see on the chart, financial and military aid in Gaza war. 6 months after that, the S&P was up 22%, and then 1 year up 34%. Strikes against targets in Yemen, the S&P was up 18%. 6 months after that, strikes on Iranian nuclear sites in June of 2025. 6 months after that, S&P up 15%. We've already seen this, and if you asked anybody, hey, are you worried about how the the Gaza war is affecting the stock market? No, because we're on to another,
Yeah.
news driven idea.
People always say, well, this one's different because that's how our human brains work. And they're actually right because none of these on this list were the same as any of the last ones. They're all different. They're all different. But the general message is, it's the same thing. It's
It's no
patience
fun in the
tends to
short
be
term, but in the
rewarded.
long term,
Yeah.
we'll be okay.
Yep. It doesn't even have to be that long
Yeah,
historically. So,
as you can see. Yeah, yeah. And if you're investing in the stock market anyway, like the S&P 500, I know the S&P 500 is an index, but I'm talking about the stocks in the S&P 500. If you're investing in stocks, you should have a long time horizon anyway. You should
yeah.
have, shouldn't just
Yeah.
be a few months, a time
Yeah.
horizon.
For that piece of the money. Yeah.
Yeah, for that piece of
Yeah.
money. Yeah.
Hey, about 6 weeks ago, you wrote a great market mail, a great blog post that's on our website called Silver and Gold. And I know I'm preaching to the choir, you know this. I mean, we had been receiving gold and silver ran for a couple of years really, really strong, just incredible returns to the upside. And we were getting questions with people with the FOMO, the fear of missing out. Wow, should I be buying gold and silver up here after they just kind of went parabolic? And you wrote that great piece 6 weeks ago. And the general message was, we're happy for the people who own gobs of gold and silver. We hope it continues for you. But
I was
don't
not talking bad about gold and silver at
no,
all.
no,
No.
but you also said in there, just if you're thinking about buying anything, including this, after it's just run so much, stop for a second, maybe think about it because it probably isn't something you want to do. So that was about 6 weeks ago. So check this out. This actually I just found this morning doing research. And this is from Bespoke. And Bespoke says gold's largest monthly decline since 2013. Gold's double-digit percentage decline this month is on pace for the largest monthly decline since June of 2013, and it would, if it holds, would rank as the eighth largest one-month decline in gold since at least 1975. It kind of give you some perspective from 6 weeks ago. Gold was $55,600 an ounce 6 weeks ago. Today it's about $4,400 an ounce. That's a decline of 21% in 6 weeks. Basically recouping a lot of that blow off top that it created. And then silver was 122 an ounce 6 weeks ago. It's only $68 an ounce today. That's down 44% over the last 6 weeks. You have to be, and there'll always be the next thing, Palantir, Bitcoin. There'll be something that runs like the wind, and then the human lizard brain will kick in and go, maybe I should buy this thing that's up a ton. Maybe not, just be careful. Maybe, but you just have to be very, very careful about chasing something that's already done exceptionally well. And this is a great example of that.
Yeah, and my next market mail will be coming out soon, and the title will be "I Told You So." I'm just kidding.
I
I'm
would
just
love
kidding.
that. We're gonna get emails. uh,
That's honestly all I had for today. Um, I I've
I've
been
got
busy.
two more things.
You got
Can
two
I
more
do?
things?
Yeah,
Yeah,
can I
yeah,
do
yeah.
two
Go
more
for it. Go
things?
for it. I didn't mean that necessarily.
Yeah, just two more things. Artificial intelligence, AI. Oh, I've used it. A lot of people, we've all used it. A lot of times I test it and I try to figure out, is it giving me the right answer? I'll ask it obvious questions that I know the answer to, stuff related to what we do here or financial planning or the markets and things like that. And a lot of times it's pretty impressive. A lot of times it's just flat out wrong. So JP Morgan put out this piece that basically on the right here, you see hallucination rates for select AI models. And it's basically percent of time the model answers incorrectly when it should have refused to answer or admitted it did not know the answer. And there's a range of, hallucination rates. With Claude Claude 4.5 being the lowest, it's still 26% hallucination rate. So a quarter of the time, it's giving you the wrong answer. Look at DeepSeek, the Chinese AI. That's 82%. So 82% of the time you ask it a question, it gives you the wrong answer. Or it kind of dredges for something and just throws it up there and hopes you don't really dig and figure out it's not right. So that's interesting. So I don't know if you heard about this. Did you hear about this? Is about 3-4 weeks ago. So Amazon started running an internal AI coding agent, and they basically said to this agent, Did you hear about this, Keith?
No, no.
They said to this, they told this bot, this program, this coding agent, hey, we need to fix a configuration issue. So go in there and rebuild the code and fix this configuration issue. But they gave the bot, it's called Kiro, too much, excessive permissions. So they said, go fix this, but they didn't really rein it in enough from what it could do in its quest to fix it. So the bot decided that the best way to fix it was to delete and recreate the entire Amazon Web Services Cost Explorer production environment in one of mainland China's regions. And it created an outage. It basically said, I can't really fix this as well as I could do if I just killed it and then rebuild it from scratch.
Oh
so
my gosh.
It said kill it, and it killed it. It took that part of their system offline for 13 hours.
Oh
so
my gosh.
So we joke about Terminator and the T-1000 coming to hunt us down.
There's a mini example, real life.
But that's a real life example where, it's a simple Amazon issue. It's their problem, but still a thing. All right. So
I do have something else actually. I was going to save this for the next episode, but I'll go over this on this one. So this is from First Trust. The data is from the National Student Loan System. Talking about how, student debt is a constant issue that just keeps growing exponentially. Whenever we build financial plans, we always account for college costs if there's a college goal. College costs increasing at well above the typical rate of inflation. And it seems like it's just going to keep getting worse because when you look at this chart showing the total student loan debt, the student loan debt outstanding in the U.S., it's straight up and to the right. And again, without getting too into the weeds, you take a look at what makes up the different pieces of the student loan debt, and making a 211% increase from 2007, just to put a number on it.
And it's mostly federal loans.
Well, I was just going to say, you look at what parts of the student loan debt make up the total student loan debt. Federal direct loans, by far and away, make up the biggest chunk of the total student loan debt. And that's grown. It used to be federal family education loans and private loans had a significant part of the total student loan debt. But just federal direct loans have grown to be such a massive part just over the last 15 years, 20 years of the total student loan debt. And I know, just my opinion, I think yours too, but what would lower college costs? Stop giving out all this free money. Stop. The federal direct loans need to decrease. And what will happen if that happens? Colleges will decrease their costs because there will be less free money out there. Colleges know that they can charge what they want to charge because they know that there will be federal direct loans giving the colleges money because that's what they've been doing.
Yeah, it's artificially inflated. The money's free initially, feels free. And then you got to pay it back, and it gets really, really burdensome.
That's the thing, and the colleges don't care. You're there for 4 years or however long
it's a business
to get your degree. They charge what they're going to charge to make money because they know they can, because they know the federal government's going to give them the money anyway. But who's left with all the debt and decades and decades and decades of hard student loan debt? The students.
Yeah, this paints the picture of when the federal government started to open the spigots for that river of federal money for student loans, and it's starts, I'm sure, with good intentions. Let's help people go to college and get ahead and build a better life for themselves. And what's resulted in is you've really, really hamstrung people with lots of debt, young people who just aren't qualified to take out these kinds of loans to this degree. And you're right, it's fed the education system. Colleges look at it and go, hey, they're going to get loans anyway. Let's just raise the price, or let's admit more people, or water down our admission standards, whatever it might be, because they're running a business. The students are students, and you'd like to think they're treated as something other than widgets coming through a factory. But in the end, it's a business, so they are kind of widgets going through the factory, the college factory. Yeah.
And the solution to this isn't going to happen overnight, and it's not going to be painless. If the federal government ever did decide to stop giving out so many federal direct loans, there would be a lag effect in universities lowering their costs. So, you'd have some, which is not a popular thing to do. You'd have some generations of college students not getting as many loans, but still having crazy high college costs. So they would be the ones that are really stuck in the really rough situation. But then over time, colleges would lower their costs as
Yeah,
there's less federal direct loans in the system. They'd say, oh, there's less free money flowing to us. We now have to lower our costs
yeah,
because people can't pay for this.
yeah. If they really went hard and cut off that river of money, severely, I see studies, I've seen studies recently that say probably a third of colleges would go out of business because
Yeah. Oh, yeah.
they're supported by this artificial money, not by real economics. So, yeah.
Yeah. Yeah.
I'm gonna skip my other thing. I got nothing else. Anything coming up you're looking forward to?
I'm looking forward. I've not been watching a whole lot of movies or TV shows, but I'm very much looking forward to the Peaky Blinders movie. It's already, I think, on Netflix,
Yeah.
and can't wait to watch that. Hopefully this weekend sometime.
I watched a short clip last night on
So did I. I did
something,
too. I think we might have watched the same clip.
and I kind of regret it. So, because I don't want to know anything, I want to just enjoy it. But Peaky
Apparently it's
Blinders
good.
is
People
awesome.
like it so far.
Yeah.
So
Oh, I'm not going, but Metallica is coming to the Sphere in Las Vegas in
oh,
October. How
that's probably
cool
gonna
would
be
that
cool.
be?
That's gonna be pretty cool.
I'm not going because I'm not going to Vegas. I don't have the time. But also, I think tickets are 4, 5, 10, 20,000 bucks a pop. I mean, they're to get
Yeah.
resale and so on. But Metallica in the Sphere, oh, that'd be fun.
I shouldn't say any concert, but I would really go see pretty much most concerts at the Sphere. I've never been, but I just want to go experience something at the Sphere.
Yeah, I've had quite a few
I
people
heard I
say
heard
you
people
could.
say it's unbelievable.
Yeah, you could see the band that you don't like at the Sphere, and you'll have such a great time. It doesn't even matter just because of the experience. So that's Mumford and Sons, right?
Yeah, oh yeah, you love your Mumfords.
Nickelback. Yeah, I wouldn't go
Yeah,
see them anywhere but the Sphere.
yeah. That's your playlist is Mumford and Sons, Taylor Swift, and Nickelback.
Oh God, I'm not going to the Sphere even to see them. All
It'd be the
right,
most wild concert.
now I'm gonna get hate emails. Thank you. All right.
All right. Well, thank you, everybody. Be sure to subscribe to us on Spotify and YouTube, and you can always watch us on our website as well. All right. Bye-bye.
Bye, everybody.
The Capital Clarity podcast is presented by FA's Keith Wagner, AA, MS, Financial Advisor, and Rick Wagner, CFP, Senior Vice President, Wealth Management. This podcast is for informational purposes only and is not intended to be taken as financial advice. All opinions expressed are of the hosts and do not necessarily represent those of Raymond James. Opinions are as of this date and are subject to change without notice. Investing involves risk, and you may incur a profit or loss regardless of strategy selected. Prior to making an investment decision, please consult with your financial advisor about your individual situation. 2003 South Easton Road, Suite 100, Doylestown, Pennsylvania 18901, 267-742-3455, Raymond James and Associates Inc., member New York Stock Exchange SIPC. The S&P 500 is an unmanaged index of 500 widely held stocks that is generally considered representative of the U.S. stock market. The Dow Jones Industrial Average, DJIA, commonly known as the Dow, is an index representing 30 stocks of companies maintained and reviewed by the editors of the Wall Street Journal. Inclusion of these indices is for illustrative purposes only. Keep in mind that individuals cannot invest directly in any index, and index performance does not include transactions, costs, or other fees which will affect actual investment performance. Past performance does not guarantee future results. 529 plans come with fees and expenses, and there is a risk they may lose money or underperform. Most states offer their own 529 programs, which may provide benefits exclusively for their residents. Please consider whether the state plan offers any tax or other benefits. Tax implications can vary significantly from state to state.